Hi everyone, welcome back. Hope you guys are having a great day. So this is a clip from a previously recorded video. This is a much shorter clip of it. But as always, not financial advice, for entertainment only. Do your own research. And I'm invested in closing companies. And if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. And let's get into the clip. So Bit Digital announces monthly production update for April. And here are the dirty details. So in April 2023, the company earned 86.1 Bitcoins, a 28% decrease compared to the prior month. The decrease in production was primarily driven by the relocation of approximately 6,500 mining units from facilities previously operated by Compute North to different hosting sites that commenced during the month, and to a lesser extent, an increase in the Bitcoin network difficulty as well. Everybody's saying the same thing on that one. But it's good to see that they're moving the miners, but they keep moving miners from one spot to another. Hopefully they can keep them there for a while and have them hashing. So they have 11,513 Bitcoin miners representing 1.2 exahash was actively hashing in North America as of April 30th. That is a decrease from what they had in March, and that's based on 6,500 miners being moved around. Okay, treasury holdings of BTC and Ethereum were 553.2 and 9,900.9 of Ethereum. Let's see, what else do we have here? Cash, they still have plenty of cash, 21.9 million of cash as of April 30th. And then as of April 30th, 2023, the company held approximately 6.2 million in USDC, up from approximately 0.5 million as of March 31st. So that's interesting that they're getting into USDC there. And then during the month of April, we got some good news here. The company finalized an agreement to purchase 3,600 factory new S19 mining units with a total maximum hash rate of approximately 324 petahash. So that comes out to be approximately like the 90 terahash miners, and they're paying about, what are they paying? They're paying $8.50 per terahash. That comes out to be about 700 some odd dollars per unit, and they paid about 2.75 million for those. Now, was this a good deal or not? So we're going to take a look at that right now before we get into their mining production updates. So I ran some numbers on this. We do have some assumptions here, as always, with looking this far out ahead. A couple of things that we're looking at here on my calculator that I use for break even on the miners comparison is, number one, network hash rate increase. So we're looking right now, the assumption is 2.5% increase per month. For the first year, 2% increase for the next year, then 1.5% increase year 3. Year 4 will be only 1% increase, but we'll see if that holds or not. And then we have Bitcoin price going up 5% per month this year, the first 12 months, then the next year, 14% after the halving event. And then we're going into basically a bear market after that, down 88.4%, and then we're going kind of back up 5% if that works out. So we're looking at Bitcoin being at the end of this year, 48,000, at the end of next year, somewhere around 232,000, maybe a little bit less than that, we'll see. And then back down to 81,000, and then back up to 145 after that. Hash rate, you can see the increases here on that one, and we're looking for as far as electrical cost, from 9.5 cents down to 4.5 cents. Okay, so here's the calculations that I did on it. We took the 90 terahash miners that they purchased. They paid about $665 for those. Those are about 3,350 watts roughly, and electrical cost at 7 cents, which I'm not sure exactly what they're getting for their electrical costs, seeing that they are using hosting providers. I don't know if they're getting any better rates. They might be getting a better rate than this, but we'll take a look at some numbers here on this. That gets us to a break even at 7 cents at 29 months. And the reason for that is because when you look at this kind of curve here at 7 cents, which is going to be, I believe it's going to be, I believe this one, let me see, we're at 4.5, 5, 5.5, 6, 6.5, 7. So it's this, not purple, well, kind of purple, burgundy line here. You can see once you get to the halving event, that extends the amount of time that it takes to break even on those because you're mining less, you're mining half of that. Okay, so you can see that curve there happening right there. Looking back over here, if we compare it to the Antminer 122 terahash miners, those are going for about, I believe I did $14 per terahash on those or something like that. So those are a little bit more expensive, but the break even on those is 15 months at 7 cents. So those would be a better break even on them. For these, you're looking at 29 months, is that right? 29 months would have been out here. That doesn't seem to add up, really. Let's see here. 29 months, why is it coming up at 29 months for that one? Oh, let's see here. 33 watts electricity cost. see if the cost, if I change the cost in this, if that makes us any difference on the break even. Nope. Okay. So that should have been probably like 19 months to break even compared to the 15 months here. Okay, let's drop the electricity down to 5 cents. And now, okay, now it makes a little bit more sense. Now these would be at 9 months, the 122 terahash, the 90 terahash, which they bought, would be at 8 months if they're that low of a electrical cost right now. Okay, but I'm surprised that the 7 cents has such a huge impact. That would be at 29. These would be at 22, 15. Let's take a look at it here. The Antminer 190 here. Let's see if it's calculating it correctly. 29 months. We're going down to 186. Then after the halving event actually would be, here's where they're breaking even. I'm not sure why it's coming up as 29 months. That would have been only 19 months. Let's see here if there's any kind of mistake. Oh, right here, that's why. Something's not working properly here on that one where they're getting into a negative territory. So yeah, it should be 19 only, 19 months on that one. So given, depending on where they are with electrical costs, if they're around 5 cents or a little bit above that, even at 5.5 cents, it might be an okay decision to go with these lower grade miners. I mean, at 5.5 cents, your break even is about 10 months compared to also 10 months for the 122. So given what we know about network hash rate growth and everything else, I think a better purchase would have been to go with like the 122 terahash miners. I don't know if they could have gotten those right away, but those would have had, I think, a little bit better return depending on where their electrical cost is. If we increase it to 6 cents, you can see now it's 10 months for the Antminer 122 and 15 months for the 90 terahash miners. Okay, so that's how you can see how quickly the hash rate has an impact on your return profitability, along with the electrical cost. Okay, so that's it. We'll leave it at that. I think they could have done a better deal on the miners here, or at least gotten better miners. That's at least my take on it. Okay, so Bit Digital here. They have 82 million shares outstanding. Stock price is around $2 right now. I did not update this from yesterday, so these are yesterday's numbers as far as stock price is concerned. Market cap is about 166 million as it is. Current hash rate about 1.25. That should be 1.2. Did I not update that? I got too many things updating here. Just want to make sure I get this right. 1.2. Nope. Okay. Oh, yeah, I did. Oh, because then I have it coming back here at 1.2. So they're 1.2 right now. But then those miners that got moved are getting plugged back in, so they'll be back up to 1.2 after that, or 1.25. Okay, so that's kind of what I'm looking at here. Future hash rate about 2.8 right now with the miners that they currently have. And we can see here that their BTC value or BTC HODL value to their market cap is about 8.61% of it right now, and the rest is the hash rate. Hash rate left about 1.5 exahash growth. BTC mined this month was 86. BTC sold, so they sold quite a bit here, 258. And they HODL 553 right now as it is. Now, BTC production, you can see it has been coming down here over the last, well, ever since October, really. But you can see the decrease that we've been seeing as network hash rate has been increasing. March was an anomaly for them. They reported 119. I think that was part of it also, that they were staking some coins. They included that as possibly Bitcoin equivalents in that number there, because otherwise everything else has been coming down here a little bit here. 86 for April, which still isn't bad for them as far as what they mined, but it is definitely a decrease of 33 from the last month. Okay, then BTC per exahash efficiency has come down to 71.37. We'll see where some of the other miners come in at. I think they're closer to 80 and above, but we'll see. And then Bitcoin HODL, you can see that that has been coming down here the last couple of months. They've been selling HODL to fund growth by miners, things like that. And then you can see how much they sold here at BTC over the last 12 months or so. And the biggest month that they sold in was February, 382. Then now, this current month of April, 258 is where they sold the most. Looking at their hash rate and revenue, you can see hash rate has been kind of all over the place here with them. It's not very steady growth. It's up and down. We were down in May, up through pretty much September into November, and then we're down. We're up a little bit, down. They got some older miners as well, so they're either selling those miners or basically liquidating those older miners, and that's having an impact on their hash rate. And then you can see the monthly hash rate difference here as well. And we've had quite a couple of, well, we had a couple good months here where increases were good, and then we had little increases here and there, and also about 4 months of decreases in hash rate as well. So that, not too good there. Bitcoin monthly revenue, you can see here that's all over the place as well based on what they're actually producing here. So they ended up about 2.48 million in revenue for the month of April. They were almost 3 million in March. So that is definitely a decrease there. And then BT sold value, you can see how much they've actually sold here in the last 12 months as well, with a pretty sizable sale of 7.43 million here in April, which I think was part of the deposits that they put down and things like that on some of the contracts that they have signed up with the hosting providers. And that might be the reason for that. Okay, last 4 quarter revenue. You guys have seen this before, and this is the same. It hasn't changed. We'll get this updated when they report Q1 results. And cost of mine depreciation, that has stayed the same here. That has been coming down, so that's good there. Bitcoin mined quarterly has been going up, so that's good there as well. Debt to equity, they really don't have a lot of debt. They have a lot of cash to pay all of that debt, so that's good there. And then total current assets, you can see here, and total current liabilities is very low. So not a big deal there. Okay, institutions did decrease a little bit here from April, or from, well, when we checked this was from 4.5 to 5.3. That decreased by 1, but it did increase the shares to 14.11 million from 14.09 million. But the percentage stayed the same, 17.09%. And we do have a change in the analyst ratings. We're down to only 1 buy rating now. We had 2 before, it seems like, in the prior month. And the price targets also changed from, well, the high stayed the same at 3. The average went up to $3, and the low went up to $3 as well. So $3 across the board on them. They're currently at $2, roughly around $2 and change. Stock-wise, I have a P of 10 with their estimated yearly revenue for the last 4 quarters at approximately 33 million. So if we look at 50% net income from gross revenue and a P of 10, we're looking at $2.01. They are currently really close to that. They are pretty much very well valued, I think, at this point in time. But if we're going to be using the 75% net income from gross revenue, then we're looking at $3.02. So they do have a little bit of room to go up, kind of like what the analysts here are thinking as well on them. Okay, so that's it for that one. The only thing with them is they got to continue to grow out, get newer miners. You can see here that they have a lot of older miners that are 59 terahash, 19. Those are all unplugged now. I'm guessing that 63 might be some running out here. But they are getting some of these newer miners, like the 100 terahash miners and the 88 terahash as well. So they got to continue to get newer miners, continue to grow. And they got plenty of cash to do it. So I'm surprised they're not doing it more, especially as we're getting close to the halving event. They really need to get that, I think, sparked a little bit more. Okay? So let me know what you guys think in the comments down below, and let's get into the next one here, which is going to be on